There we go. Hey, what's up, Tommy?
What's going on? How are you?
Doing good, man. Doing good. You guys, you have fun, like end of year holiday plans and all that stuff going on, or what are you guys doing?
Yeah, we're staying local, which is fun for me. Get to hang out with the family and hang out with my little girl, and
There
it'll
we
be.
go.
We're getting a ton of snow. If you can't, I got like a foot in my yard just last night, so we're getting a bunch of
Jeez.
snow right now.
I thought I could see a little bit of snow behind you, man. That's a lot. Yeah, we right now it's rain for us in St. Louis, but hopefully that'd be fun to get a white Christmas. But yeah, we've got a 6-year-old, 4-year-old, and 2-year-old, so it's going to be chaos in the best way. Staying in town, but
Very cool.
nice, man. Well, I appreciate you taking time out. I know this time of year is crazy, especially for you guys with everything you've got going on. I mean, just for everybody, I'm going to be introducing Tommy here in just a second. I know today, really excited to have you on. We've had you on with our Elite Masterclass, with our Thought Leader Spotlight series. We appreciate you taking like live Q&A through this too. I'm Matt Camp over here at DealMachine, working on partnerships here. And for today, we're really going to focus on all things around like tax strategy, as well as it could be anything around like legal strategy as well, like how to set up LLCs properly and all that stuff on the real estate side. So feel free to jump in the chat if you're open to saying where you're watching from, saying, hey there. We've had people meet future business partners in the chat before. So it's like, hey, introduce yourself, say where you're watching from, where you like to invest, if you're doing your first deal or if you've done multiple deals before. That'll kind of give Tommy a little bit of better context too from you guys in terms of knowing how to tailor everything he talks about today. But Tommy, in general, he's the president of PCS, which is Prime Corporate Services. Been at it for over 10 years now. You guys have helped over 100,000 entrepreneurs. Is that right?
100,000.
Yeah, that's crazy, man.
I can't believe it either.
Yeah, that's nuts. Yeah, so you guys have helped quite a few people when it comes to like legal structure, taxes, all that stuff. We know we have a ton of partners that love recommending you guys and that you team up with too. So definitely have heard quite a bit about everything you guys are working on. Can you maybe start just introducing yourself a little bit more? Tell us more about your journey, and I'll give you the floor to really teach our audience today if that works, man.
I love it. I love it. Yep, absolutely. Thank you. So thank you everyone for being here. My name's Tommy Thornburgh. Like Matt said, I'm the president here at Prime Corporate Services, and 10 years we've been going after it. We focused when we first started Prime Corporate, it was with the intention of helping the solopreneur or the startup business owner on legal and financial topics, right? I think when you first get started with any business, oftentimes you maybe hire someone locally or you do all the research yourself, but you don't really have a contact point of who you can reach out to. And that's where I think we've really become the trusted company within the industry of helping with entity structure, holding companies, parent companies, LLCs, S corporations. From there, how you can build and develop a separate credit profile, build up business credit off of that entity once it's structured. Everyone has to file their taxes, so we have a full team of accountants and CPAs to make sure those taxes are filed appropriately. And then protect the legacy, right? Estate planning at the very end of that journey, trust, will, living will, power of attorney. So a lot of what we do is not the most exciting conversation, but it's one of the most important to keep more money in your corner and to protect you and separate your personal and your business.
Yeah, that's the thing we hear often too, is people asking like, hey, do I need an LLC yet before I do it for my first deal? Or, what should I be doing from a tax standpoint? And just like this time of year is a good time to be thinking about all this stuff and really taking action, set up next year for success. So could you maybe kind of give a rundown there on the playbook, really on both of those ends of what you guys do, specifically for real estate investors and especially the newbie who's like starting to try to do that first deal?
Yeah, for sure. The first thing that I'll tell anyone is just work at your pace, right? Mm-hmm. Crawl before you walk and walk before you run. But one of the things that the IRS is looking for is that you are showing the intent to treat and operate as a business. So if you have the intention to treat and operate as a business, then structure it that way from the very beginning. Why not set up that LLC? set up the LLC from the beginning to give yourself the privacy and the protection, maximize on the tax benefits. And then once you're making, we got a fire alarm going off over here. Once you're making $50,000 to $100,000 or more, we can go LLC taxed as an S corporation. And
avoid check that out. Go for it.
Yeah, give me a second. Let's see.
Yeah, go ahead. No worries. Yeah, we don't need that on. There we go. That was better.
What do we do?
Interesting. Everybody okay?
Everyone's like, "What do we do?" I'm like, "I don't know."
Yeah, there you go.
We're just hey, we're not leaving these phone calls. We'll burn this place down to the ground.
That's dedicated. There you go. Nice. Where were you at? Sorry.
So before the fire. I think the bottom line that I try and drive home though is like if you're going to treat it like a business, set it up properly from the very beginning as a business, and track your expenses, right? Organize your expenses. Do whatever you can to make sure you don't get to the end of the year, which that's where we're at, right? We only have 15 days. Go through your expenses back to the beginning. Did you pay for softwares? Did you pay for advisory? Did you use your phone for your business? Do you have mailers? What types of business expenses do you have this year that you could still write off for years to come?
Yeah, especially with us too. I mean, I know a lot of people listening to this are either already driving for dollars or thinking about driving for dollars. So do you think like could the car be something that fits there? Like what can people really be writing off or be thinking about in terms of business expenses if they're doing that?
Yeah, there's depending on the industry and the business that you're in. Everyone has those softwares and those advisory costs that can be 100% deductible, but write off those vehicles as well. Write off if you're over 6,000 pounds, if you're under 6,000 pounds, business meals, all those things become deductible in addition too.
Nice. Love it, man. So one thing, the LLC piece of it is something we do hear often. Like that's that's probably the first question asked is like, hey, I'm going to go try to do my first deal. Do I need one? I think it's a good way to approach it. Can you maybe talk through your guys' strategy that you teach in terms of structure around LLCs and how to think about your real estate business as it grows and protect all those assets and the privacy around that? Like why to do that?
For sure. Yeah. I'm going to share my screen here.
That'd be great. Let's see here. There we go. Yep. Got it.
I absolutely love this slide for a couple reasons. It's simple. It's easy. Don't let it overwhelm you if you are brand new. But one of the things that I like to say is like, it's not about where you are right now. It's where you're going to be in 1 year, 3 year, 5 year, 10 year, right? So eventually up top, you're going to want a trust, a will, a living will, a power of attorney. If you own real estate, it's probably worth looking into getting a living trust right away. But protect yourself. You're working very hard to protect this legacy, and having an estate plan is an excellent thing to have in place. And then underneath that, you'll see I have a holding company. And there's a lot of talk around holding companies and where they're best structured, whether it's Delaware, Nevada, Wyoming. They all have additional privacy and protection laws that other states don't offer. So my holding company is based out of Wyoming. It doesn't do any business. It simply owns my other businesses. So if I have an active LLC for wholesaling or fix and flips, I want to separate that from my long-term buy and holds. And then if I have trading accounts, if I'm consulting, education, all the different streams of income, I want to break those up. Even if I have a 5%, 10% ownership, it's not Tommy Thornburgh that owns those shares or owns that percentage. It's the holding company that owns the subsidiaries to give me the privacy and the protection. Does that make sense?
Yeah, absolutely.
So all we're trying to accomplish when we look at this legal and the financial, if we really dumb it down and bring it to the ground level here, we're trying to have three major takeaways. Number one, privacy and protection. Number two, tax benefits, profit or loss. And number three, show yourself as a business, not only to your clientele, but to banks and lenders as well.
Nice. Okay. Yeah. So if they, if you're getting started, like let's say you're, trying to take step one with this, like, if they're, and I know you guys do a really good job of this as well, of like that consultation of going through and teaching people, hey, here's where to get started. Can you maybe give that playbook as well of like, hey, here's, where you'd recommend people go from A to Z and do that first step?
Yeah, for sure. If I was just getting started and I knew that my long-term vision was real estate and multiple streams of income, I would start with that holding company out of Wyoming, right?
Mhm.
And I wouldn't have known that if I knew what I knew 10 years ago. I would have probably started with a subsidiary. But the reason that I say start with the holding company, that way you legitimize yourself as a business. Once you're going to do your first deal or you start actively getting involved with the business, get that second entity set up out of the subsidiary state or where you live. But that way the holding company is always going to be the owner. And as you grow and as you scale, you can start to have these additional lines of credit or these additional businesses that are separating out the holding companies where you still have the privacy and you still have that protection. But start with the holding company so you still get all those benefits, but you're not jeopardizing your privacy moving forward.
Got it. Okay. Where do you see people, like, what are the most common mistakes that you see when they're trying to approach this? Like what are some pitfalls to keep people aware of before they even jump into this approach?
Yeah, I think that one of the big things that people look at is they just go set up their own entities. They go to the state website and pay a state the filing fee, and then they don't have an operating agreement. They don't have articles of incorporation. They don't know what they submitted to the state. And then they're years down the road, and that's when you'll hear a lot of entrepreneurs say you're not in business until you've been in a lawsuit, right? Why do business owners say that? Because once you're tried and once you're tested, it's either going to wipe you out completely or you're going to weather the storm and get through on the other side. So if you give yourself a solid foundation to build and grow off of, you put yourself in a better position long term. Have an expert file your business structures and have a professional file your taxes. If you want to treat this like a business, you're going to reap the rewards of what businesses have to offer. Maximize on those deductions. That's what I'd recommend.
Yeah. Yeah. On the tax side, can you maybe dig into that a little bit too? I know you guys do a great job of teaching people, hey, here's the, obviously you touched on deductions a little bit, but if you have any kind of like higher level advice, especially, timely for wrapping up the year going into the new year, would love to, our audience is always looking for advice there. So.
Yeah, for sure. What I'll do, I'll give you five steps to take into consideration for tax preparation.
Perfect. Yeah.
So number one, I would say have some sort of a tax organizer, right? How are you organizing your expenses? An Excel spreadsheet, QuickBooks, one designated credit card. Take that into consideration. Download some sort of an organizer. If you're working with us, we'll get you an organizer that you can track your expenses in. Number two, gather the expenses, right? Identify where you're going to track the expenses is number one. Number two, gather those expenses and put them in their categories, whether it's phone and internet, whether it's advisory. You need to gather those expenses as number two. Number three is make sure that you have not only a professional, but you understand any sort of engagement letters that you need to be a part of. What I mean by that is when you work with us, you know that we're going to be filing your taxes. We're going to get you any of those engagement letters that you need, depending on your business, to give us the authority to represent on your behalf. Does that make sense?
Yep.
Number four, submit all your information into that professional for them to review it, whether that be a queue, whether that be by mail, whether that be by email. When you work with us, we have a secured portal that you upload all your information into so that we can review it. And then from there, it's a matter of just filing your taxes and making sure that you're reviewing it with your professional so you're not leaving money on the table.
Love it. So one thing I was curious on, I mean, we hear people use the phrase like real estate investing friendly, accountant. What would you consider that? Like, what would you consider like understanding the full benefits of, being able to leverage the power of real estate within taxes?
Yeah, I think it just comes down to experience in a lot of cases, right? I mean, there's two things that I would look for in this category. Number one, what are some new tax code changes? Every year, there's new tax code changes that come out. They're going to be coming out with them in the next couple of weeks as well. And last couple of years, business meals have been 100% deductible instead of 50%, right? Increase in bonus depreciation. But also, how many real estate investors do you file on an annual basis? Right? Our accountants and our team file thousands of real estate investors on an annual basis, from wholesalers to fix and flippers to short-term rentals to long-term buy and holds. We really see that full spectrum of what people are able to deduct and how they utilize them. And then for those of you that have investment properties, what's being recommended as far as cost segregation studies and accelerated depreciation? So when you hear real estate friendly, real estate is always friendly from a tax standpoint. Real estate's the king when it comes to depreciation, right? That's why a lot of wealthy people and wealthy businesses invest back into real estate to help offset some of that tax liability. But I think just the amount that they're doing and what recommendations are coming makes a huge difference.
Awesome. So a couple more common ones we hear too. I know one of them is the whole self-directed IRA. Do you have any tips or advice there in terms of how to leverage something like that properly?
Yeah, for sure. So we have a company that we've worked with that rolls a lot of these. We've done some work with Horizon in the past, and they've rolled a lot of these where it makes it more investor friendly. I'm trying to find. I had a slide that I would have loved to share, but I don't know if I have it on me here. They actually increased the amount that you can contribute this year for qualified plans. So IRAs went from $6,000 to $7,000 a year. Simple plans went from 14 to 17. 401s went from 20,500 to 27,000. That was a big jump. SEPs 61,000, and defined benefit plans 245,000. But being able to roll that, especially into the market and the unknown that we're currently a part of, I think it's a great idea for those of you to look into that, of rolling that over and giving yourself the ability to invest, obviously.
Yeah, that one. And then we also, if you could talk through like 1031s, do you guys assist in that process at all? Or
For sure. I've got a really cool little 1031 slide actually that I'll share. Let me just share this right here.
Go ahead. And feel free to jump in the chat and ask questions too. Like I said, I've got plenty on my end, but want to make sure you guys get a chance to ask Tommy questions too.
So anyone, feel free to screenshot this or take a picture of this, but here's 1031 exchanges made easy, right? Make sure your home is sold at a gain, important. Identify the property you want to buy. Work with a qualified intermediary to make sure that you're actually doing that. And then 90 days to identify the new property, 180 days to close. Here's a big one, titles must mirror. I want to talk a little bit about this titles must mirror. So I've ran into this where, Matt, let's say that you purchase a home under your name and you quit claim deed it under your LLC. Sometimes lenders have a hard time matching that up and you lose the ability to 1031. So before you quit claim deed or before you transfer any properties, make sure you talk to your lender, make sure you cross the T's and dot the I's, because we want the privacy and we want the protection, but we also don't want to miss out on tax benefits like 1031s. So make sure to verify with your lender before you make decisions and changes like that. But here's kind of a good just process of how 1031s work in general.
This is great. Nice. Can you walk through this more detail as well, or?
Yeah, I mean, so this is going to be depending on the property, but let's just say a lot of what you're doing with the 1031 exchange is you're deferring taxes to later, right? You can't avoid taxes, you can defer taxes. And this is what I say to a lot of people as well in regards to the retirement. Like, there's no magic wand that just eliminates taxes. There's strategies that lower your tax liability.
Mm-hmm.
So if you're 1031 exchanging a property, let's say I buy a property for $100,000 and it's worth $200,000. I'm rolling that equity of $100,000 into the next property to buy that down, but still not have to pay any sort of capital gains on that $100,000 earned up front. I'm deferring it into the next property. So eventually it'll catch me, but I'm pushing that down the road, right?
Yep.
I had this conversation with one of my coworkers. I was like, I'm putting money into these retirement accounts at the end of year to just defer some of my tax. But I'm like, if I'm honest, I don't love doing it. If I put $62,000 into a SEP and I'm only saving $30,000 on my taxes, would I have been better off putting $60,000 towards a property and accelerating depreciate that property itself? So depending on, are you a real estate professional? Do you have a license? Like, these are all things you need to talk to with your professional to make sure you're doing what's best for your situation. But then I have the conversation with my wife where it's like, well, at least we put the money into the retirement account. But I'm like, then it's going to be taxed later when we pull it out. But if I'm making more money later than I am now, that's a good problem to have. I'm probably going to be okay with that at that point. So
fair.
It's nice to diversify those things. But for real estate investors and for entrepreneurs, I know you're loving rolling that back into the next property and into the next deal. So 1031s are a great way. And there's talk about them taking 1031s away. I don't see it happening, but I've been wrong before. So
yeah, so I feel like they've been talking about that for years, but it's we'll see.
Absolutely.
Yeah. Yeah, thanks for breaking that down, man. I again really appreciate you coming on and kind of showing this for the newbie as well. On the one thing I wanted to ask about as well is I think you guys do a great job of explaining like what that FICO credit score is important for and how to build that. And can you maybe explain that concept as well for our audience, just from a business, financing health standpoint?
For sure. Yeah, I'd be happy to. So there's personal credit versus business credit, right? Everyone has a legal name. Let me share my screen again. I've got another really cool slide.
Yeah.
I think will go along with this very well. So you have the ability to build personal credit just like you have the ability to build business credit. And what I love about this slide is it helps you show how important it is that personal is personal, business is business, right? We all have a legal name. We all have a social security number. And we all have a personal FICO credit score, which very difficult to build your personal credit, very easy to ruin it. We want to do the same thing for the business. Make sure you have a business name. Get yourself an EIN number if you don't already, employer identification number. But you can build and develop a paydex score that is similar to your FICO in the sense that it's a numerical range, but it's different in the sense that it ranges from 1 to 100. 80 to 85 would be like you having a 750 to an 800 credit profile. But the beauty of building business credit and corporate funding, I don't care if you have $1 million in your checking account or $1 in your checking account. I would always rather utilize business credit, let the business pay for itself, where I'm tracking and organizing my expenses, and then paying yourself from there in the form of a salary or a distribution. This is a great way to extend a lot of your additional funding options. Best time to ask for money is when you don't need it. Extend those credit lines, lower those interest rates, build up credit lines on your personal and your business. But this way, you're actually separating your financial liability between your personal and your business as well. And we have a business credit development program that really breaks that down and helps people understand over the course of a year, what are the 3 main steps. The first step is getting your DUNS number to establish that Paydex profile. The second step is getting some starter accounts like Home Depot, Uline, Staples to build up and inflate your Paydex profile to get to step number 3, where you can actually get credit cards with major banks, and over the course of a year, 2 years, 5 years, eventually get lines of credit. Right? I think it's important to understand, like, if you have good personal credit, your life is usually a lot easier. If you have good business credit, your business life is most likely going to be easier. Everyone has problems, everyone has issues, but if you make money and if you have good credit, it usually makes those issues a lot easier to resolve.
Yeah, that's a great way of putting it. So appreciate you breaking that down too, to a simple level that way. But
for sure,
this is great, man. Is there anything else in terms of I don't want to take too much of your time today. I know you're busy, and I appreciate you. Hopefully you're feeling better. And I say you weren't feeling great before, but do you have any other kind of like end of year last minute advice here on either side for people kind of going into the new year and making sure they start the year off right when it comes to real estate?
Take your vitamin C. Start there.
There we go.
Before the holidays.
Especially this year. Yeah.
Everyone take an extra dose of some vitamin C. Yeah, I've got a couple recommendations. I think the first thing is track your expenses. I know I've said it 3 times, but I will be screaming it from the rooftops every chance I get until the end of the year. You should have a profit and loss for your business. If you don't have a profit and loss for your business, you have a hobby, you don't have a business. Track your expenses. Make sure that you understand what you're looking at before the end of the year. The second thing is take advantage of the free call, right? We've put that together to really help you understand that everyone's situation is different, right? I can give you this 30,000 foot view and you can go into that call with questions about your specific situation, but that call's for you. If you're brand new, let us know you're brand new so that we can educate you from the ground up. If you're a seasoned vet, you've been in business for 30 years, tell us you've been in business for 30 years and that you have 10 other businesses in place so that we can help you understand if you have the privacy and the protection. But other than that, set yourself up for the growth that you want over the next couple years. And hopefully we're in those plans to help you really grow and scale for the future. So
great stuff, man. How can people get in touch with you too if they want to do that call?
So let me share my screen again. I've got a QR code with DealMachine, and then I don't know, do you have the link that we made for you that we can maybe share in the chats for everybody as well?
I should be able to track that down here. Hold on, let me look.
If not, it looks like it's on this slide. So primecorporateservices.com/DealMachine.
Awesome. Thanks for hooking us up. Yeah.
Scan this QR code right here, and it's a free call, 45 minutes to an hour. What's the catch? I know that you probably need a business entity. You're going to want to build business credit. You have to file your taxes. And as you have success, you're going to need some estate planning. So help you by actually helping you, and hopefully we can earn your business over time.
Love it, man. Yeah, you guys are phenomenal at offering, that free value there and really helping out our audience too. So really appreciate you guys offering that to our people.
Of course.
Nice. Well, really appreciate the time, Tommy. We'll have to do it again at some point as well in the new year. I know, again, we've had you on for our pre-recorded interview, the Thought Leader Spotlight series. Go check that out on our YouTube channel too. You've done, I know you were great on that. We had you on our Elite Masterclass series. So if you want to get more involved with the Elite Masterclass while you're watching this, reach out to me, just Matt at DealMachine, MATT at DealMachine.com. I can show you how to get more involved there. But otherwise, Tommy, thanks again for coming on. Appreciate your time.
Thanks for having me. I appreciate it. Thank you, everybody.
All right, guys. Happy deal finding and good luck going into next year. Thanks.